Now, BlackRock, one of the world's biggest investment firms, said today that emerging markets are far from being out of the woods and that growth in the emerging world is set to slow further as China rebalances its economy. Now, for his perspective on emerging markets, we're now joined by Saruhan Hatipoglu, the CEO of BERI SA. So much. Thanks for being with us. Good to have you here.
Good to see you, Michelle.
So, Saruhan, BlackRock not very optimistic on emerging markets. What's your outlook? Do you concur?
They're not, and they were doing okay actually when the crisis erupted. They were keeping the faith, but now we're seeing that they're not too optimistic about it. There's not much to be optimistic about. I think I do agree with them, and we've been telling our clients that there's going to be more turmoil in the markets in the next couple of months. But we have to be careful when analyzing emerging markets, Michelle. Not all emerging markets are alike.
Of course.
A lot of the investors are making the mistake of going with the exchange trade funds. They're following which are following the large indices, right? So they're going for the BRICS, the mints, the pigs. So if anything happens there, other countries suffer. I think emerging markets have earned the right to be differentiated now, and I think they need to be analyzed separately.
Which emerging market do you think is in the strongest position?
I think Mexico has been doing well, and the reason for that is they've done structural reforms during the good times when relatively free money was coming in. They've undertaken financial reform. They were able to reduce lending rates. They are doing much better regulation in their banking system. Lending activity is increasing. We're sanguine on Mexico and Philippines as well.
Well, one of the factors that have thrust the emerging markets into this chaos has been the Federal Reserve saying that it's scaling back its massive bond buying program. Today we heard from new Fed Chairman Janet Yellen. She said that the economic data was a little soft due to the weather, and would love to get your take on that. And she also said that they're going to continue the tapering, but perhaps she mentioned the word slowly in there with a little bit more moderation. What's your take on her comments?
Well, a G20 meeting was going to be a diplomatic one, right? So she had to do this because the response from the emerging markets about the tapering was quite strong. India's central bank chairman said the U.S. is acting very, very selfishly on this. I don't agree with the emerging markets on this one. They had this coming. The tapering was announced in June.
The warning signs have been there for a while now.
They have been there. Those who have saved during rainy days, that their structural reforms were affected far less than the ones they were spending the easy money that's coming in instead of increasing investment.
So looking at her comments, do you think that we may then see a slight scale back in the tapering or maintain the $10 billion a month reduction pattern?
I believe that there could be some deceleration in the tapering based on the data that we're going to see from the emerging markets in the next couple of months.
Right.
But my guess at this point is they're going to stick to what they've said because they also need to think about the U.S. market, right? The country is growing.
Absolutely.
They can't continue the stimulus the way that they have been.
Now, currency volatility has been a big issue. The Turkish lira, the Chinese yuan is now causing investors some concern. Should we be concerned about it, or is it just a little bump in the road?
In the Chinese case, it's a bump in the road, I think. And to be honest, the depreciation was very little. Its impact is not going to be that much. What concerns me, though, it could be a big thing, because a lot of the Chinese companies and global investors have been buying this complicated derivative product. And the problem with that is they're hedging on the appreciation of the currency. If the currency continues to depreciate, they are going to sell these, and the depreciation can actually accelerate in China. I hope it's not going to come to that. We'll leave it at that and we'll watch.
Okay, we're definitely watching the situation in the Ukraine and how that's affected Russia. Ruble's taken a big hit. What's the big impact on Russia, though?
Well, Russia is heavily involved in Ukraine, and I think with the situation in Ukraine, if crisis gets worse, Russian stock market is going to be affected badly. It's very undervalued now. It's good buy right now, but it's going to be affected very badly, and ruble is going to depreciate even further, which is not a good thing because their economy is not functioning on full market.
Russia's banks estimated to have exposure of about $28 billion in the Ukraine.
Doesn't surprise me. That's a good guess, yes.
All right, we're going to have to leave it there, but good to have you. Thank you so much, Saruhan Hatipoglu, CEO of BERI SA.